Welcome back. You're watching Opening Fire. You've got TCS now at the highest point of the day. The stock has moved up almost 3% plus. 2065 is where it's trading at, followed by all the other big three following TCS. Wipro, HCL Tech and Infosys are also up more than 1% apiece. So today, the laggards of the last few days have started to take the lead. Reliance Industries also 1% right now. Nischal Maheshwari, Head Research, Wholesale Capital Markets at Edelweiss Financial Services, joins us from Mumbai. Nischal, thanks very much for taking out the time. We've seen us creating a new record high, and that's come in after a really long time, after 2008 January. You think that this time around that we've taken this level down, it's going to be easier to maintain it? Because there are still other issues that we are awaiting. Elections now, at least the initial excitement is behind us, which is why we reached this record level. But then you've got issues like the taper, our own macroeconomics that we need to watch out for. So how do you think the sentiment gauges at this point?
I think on the sentiment wise, I think the market is still sustainable. Yes, I agree with you. There are a few challenges on the ground. Macros, will it improve from here? Will it get worsened? I think I will vote for macros improving, though not dramatically, but there will be a marginal improvement which will keep on happening going ahead. As far as tapering is concerned, I think there would be some knee-jerk reaction to that, but I think largely most of that seems to be factored in, and I believe rupee will not react the same way it reacted last time, given that we have been able to contain our CAD pretty well. So yes, there are challenges, but I believe since your earnings from the last time, if I remember it right, in 2008 when it peaked out, at that time the Sensex earning was close to around 850 rupees, and now the Sensex earning for FY14 should be around 1300 rupees, and the market is still at the same place. So valuations are in your favor that way, and I think that is what is going to sustain the market at these levels.
You think the bigger lookout is going to be on the 2014 elections, at least from foreign investment point of view, in order to get more funds coming in? A stable government is what everyone is awaiting.
Yes, I think stable government is what is required actually, and these last state elections is giving you a little bit more confidence that we'll have a more stable government in the center than what people were anticipating. So I think that's what the euphoria is about in the market. And besides it being stable, I think if BJP does come into power, the expectation is that the leadership will be more decision making. So I think that's what is required, and that's what that's what the market is expecting.
All right. While we've been talking about the record high on the index, there are still those stocks which is still under by about 25 to 30% So it's not it's not like a broad-based comeback from all quarters of the market which have contributed to lead the index higher. There are a few heavyweights, a few stocks which have done that and boosted the index higher. So at this point, does one get too excited about being at a record high, and or should we just take a pause since we're already there? Probably hope for a slight correction to come in and then seek lower levels.
See, incrementally index may not go away, run away a lot from here, but the rotation in sectors will start happening, or rather it's already happening and it will continue. So the high priced sectors like the staples like ITC, levers and all, the consumer staple sectors and the so-called quality stocks, I think they will start losing their sheen, and people will start trading with them, trading in them to buy more cyclical stocks like banks and industrials. That's what we have seen, that most of the banks and industrials have appreciated in the last 1 month, and that I believe will continue to happen in expectation that the economy will start recovering, and possibly quarter down, basically even the interest rate will start easing out. So I think these are some of the things which will happen, and the broader market may still remain around 6,500, 6,600 at the peak, but I think a lot of stocks which are underpriced at the moment will start seeing better valuations.
Okay. Talking about, you made a mention about banks at this point. While the private sector banks have seen an uproar over the last few days, stocks like ICICI Bank, IndusInd Bank, they've seen Axis Bank, they've really seen a lot of interest building up. The stocks which have fallen behind, like the PSU lot, they too have seen incremental money pouring in. SBI has seen money coming in, Bank of Baroda, and some of the other mid-tier PSU banks are also looking interesting from a trading point of view. Right now, if you were to probably make a comparison between the two?
Yes, I think some interest should start coming even in the PSU banks, given that the valuations are in their favor. And if we expect that the economy will recover, basically, so will the quality of assets also. So I think there is definitely a case for trading bet as far as PSU banks are concerned. But private sector banks, I think the shift will start happening from the so-called quality names like HDFC Limited and HDFC Bank to other banks like ICICI, Axis and all, which are, so I think this transition will keep on happening over a period of time now.
Okay. Do you think currency related sectors like Pharma, IT for that matter, which up until just a few days back was one of the laggards in the last month and a half actually, since the rupee has started to stabilize, none of these stocks have actually done anything much, but suddenly the interest is coming back. Do you think the focus is going to be on what happens with the currency and the implications for some of these sectors?
I still believe that IT will continue to do well because there is a strong demand which is coming in the US. But I believe pharma, more or less everything seems to be priced in. So you have got a 62 rupee basically, which I think most of the analysts have already priced in. And growth would be normal. So pharma is a sector basically where growth is not cyclical. And so a normalized growth of 15 to 20%, I think that's also already priced in. So I think the pricey stocks in pharma sector should start seeing corrections happening.
Okay. We're going to see the earnings season kickstart once again. This time around, any meaningful changes, any meaningful uptick in earnings that we can expect?
It's too early. I have not done the numbers as yet basically for the current quarter.
Let's talk about, at this point, from a retail investor's point of view, what's the best strategy to go forward with? Because you're at record high, stocks have really moved up. Though, if you have to look at the mid caps and small caps, they're still lagging behind some of these large cap names. But from a retailer's perspective, what should the strategy be to adopt?
I think retailers should also start investing money basically, and they can choose the route either through a mutual fund or direct investment if they have a good understanding of the market. Okay.
Do you see, right now at least, we've not seen too much of retail participation. Do you think that at this juncture, for them to come in could be slightly pushy because, you are seeing high levels. So for them, it takes a little bit more to come in at this point.
See, the way I see is basically if the BJP government is there in the center and with a reasonable majority, then I see definitely higher levels for this market. And if they are invested retail at this time also in the right stocks, I can still see another 25-30% kind of a gain in FY15.
Okay. The interest that we've been seeing from FIIs, are you seeing that continuing?
I have seen, for the moment, the last month was very, very easy for them. Everybody was waiting and watching basically what is going to be the outcome for December 8 elections. What I see is now their minds are made up and they are waiting for a right point to enter. So we have not seen increased interest or increased purchases right now, but there is definitely increased interest by FIIs.
All right. Just want your word on what's been happening in the power sector, Nischal. I mean, obviously, with the CERC, today's news talking about, the guidelines being put out with regards to the tariff for FY 15 through to 19. Negative implications seen across the board for the likes of Power Grid, NTPC. Are you tracking the power sector closely?
See, the CERC norms is saying that the abnormal or the supernormal profits which these companies were making, especially they should be passed on. So anything above the normal utilization in case of Power Grid could be 98%, case of NTPC could be 85%. So the profits which were getting made and the ROEs which these companies were made, they are supposed to be shared and passed on. So I think if this norms come through, I think for NTPC the ROEs would fall to around 18-19% from the current 24-25. In case of Power Grid, the impact would be much lower, given that the profits right now start at 98%. So supernormal profits start at 98%, which will now increase go up to 99%. So the impact will be much lesser actually in case of Power Grid.
Okay. Let's talk a little bit more about the mid caps and the small caps and the catch up that they could play, because so far, I mean, we've been seeing much of the incremental interest, and whatever beeline is being made for quality large cap names. When do you see the quality mid cap names and small cap names starting to play up?
Mid cap quality names, I think they are already up. Most of these stocks basically which had good strong quality, basically they are all up, I think 50 to 60% in the last 1 month. You look at any of the industrial names, all the quality stocks are up 50 to 60%. Where it is Voltas, KEC, Kalpataru, you name the good stocks, basically all of them are up 50 to 60%. I think that trend will continue for some time till their valuations hit 20-25% discount to the large caps.
You spoke about a few names there, and talking about the larger names from the same pack, BHEL, L&T, and they too have witnessed significant buying this time around over the last few weeks. Does that pause here, or do you see that carrying on?
No, I see basically going ahead some amount of profit taking happening around these levels. Because at these levels now people need to, the undervaluation is gone, now people, the investors have to wait for the companies to deliver numbers. So if the number continues and the upgradation of earnings happens, then only the stock should go ahead. Otherwise I think it is a good time to take away some profits from these stocks.
Any other sectors that you're underweight on, Nischal?
We are underweight cement, we are underweight autos, we are underweight real estate.
Okay, got that. Nischal, thanks very much for joining and really appreciate you taking out the time. Nischal Maheshwari of Edelweiss talking about the markets and a few other sectors that Edelweiss is overweight and underweight on. We're going to take a very short break on that note. Come right back. The Nifty right now is down about 1/3%, 6346. Talk a little bit more about what's been happening in the macro environment. Dr. Subir Gopran will be joining us in just a few minutes.